Hey everyone, welcome back to Corporate Decoder. Today, ADTRAN Holdings Incorporated ADTN just filed an 8K report detailing a new credit agreement, and I am seeing a shift in how they are funding their operations that investors need to understand. Quick note, this is not financial advice, just my take on public filings for educational purposes. This new agreement brings in significant capital while replacing an older one, but it comes with tighter financial controls that could impact future flexibility. Alright, let's dive into what ADTRAN Holdings Incorporated, or ATN as you'll see it traded, has put out. This report is all about a new credit agreement they've entered into. Think of a credit agreement as a company's big loan deal. It is how they get the money they need to run the business, invest in new products, or maybe even buy other companies. This particular filing is called an 8K, and it is used to announce major events that shareholders need to know about right away. In this case, the big news is that on the 21st of July 2026, ADTRAN Holdings Incorporated, along with their operating companies ADTRAN Incorporated and ADTRAN Networks, ACI signed a new credit agreement. This agreement is for a substantial amount of up to $350 million. This new deal is essentially replacing an older credit agreement they had with Wells Fargo, which was put in place back in July 2022. The main reason for these kinds of agreements is to secure funds for general corporate purposes, which basically means for anything the company needs money for that isn't specifically forbidden by the agreement itself. Now, let's talk about how this new loan works and what it means for the company. The interest rates are tied to what they call the term benchmark rate or the base rate, plus a margin. This means the interest you pay can go up or down depending on market conditions and how the company is doing financially. The interest rate margins can range from 1.25% to 3.25% depending on the type of loan and the company's financial leverage. They also have to pay a commitment fee of 0.25% on any money they haven't borrowed yet. This is pretty standard for these types of agreements. What is really interesting here, and something you'll want to pay attention to, are the strings attached to this new loan. The agreement comes with what are called affirmative and negative covenants. These are basically rules the company has to follow. The negative covenants are the ones that can really limit a company's actions. They include restrictions on taking on more debt, selling off assets, making investments, paying dividends, or even merging with other companies. And this is where the rubber meets the road for investors looking at the company's financial health. They have to maintain a consolidated senior secured net leverage ratio below 3.25 to 1.0. This means the amount of debt they have compared to their earnings can't get too high. They also need to keep their consolidated fixed charge coverage ratio above 1.25 to 1.00, which is a measure of how well they can cover their essential costs like interest payments with their operating income. There is also a liquidity requirement that kicks in under certain conditions, meaning they need to have at least $50 million in readily available cash. To help secure this $350 million loan, ADTRAN Holdings Incorporated and its subsidiaries are putting up pretty much all of their assets as collateral. That is a significant commitment. They're also pledging the shares they own in their German subsidiary ADTRAN Networks. See, this shows how serious they are about securing this funding. When a company pledges so much of its assets, it means in a worst case scenario, lenders could take control of those assets. As part of this new deal, ADTRAN is also terminating several older agreements. This is normal when you are replacing one loan facility with another and ensures there are no conflicting obligations. Now, looking at the exhibits, we see the actual credit agreement itself, a guarantee and collateral agreement, and a share pledge agreement. These are the legal documents that lay out all the specifics of this loan. Also attached is a press release from the 23rd of July 2026, which likely provides a more company-friendly spin on this announcement. The fact that they are refinancing at this time, especially given the recent negative news headlines about weaker than expected results, and a stock price decline, suggests they might be trying to secure more favorable terms or extend their debt without facing higher borrowing costs. News from the 23rd of July indicates that ADTRAN is refinancing, which is lowering their borrowing costs and extending their loan maturities. This is a positive move to improve their financial flexibility. However, other news from around the same time mentions issues with Q2 results and margins and a significant drop in their stock price. This creates a bit of a mixed picture. They are securing better financing, but the underlying business performance seems to be facing headwinds. This filing itself doesn't contain the juicy financial tables we usually look for in a 10K or 10Q. Those documents would show us revenue, profit, cash flow, and balance sheet details. However, the context provided by the news headlines is crucial here. ADTRAN's stock has fallen dramatically recently, with reports on the 22nd of July and 23rd indicating that preliminary results missed guidance and estimates, leading to a sharp decline. For instance, one headline mentions an ADTRAN and warns of weaker Q2 results and margins. This suggests that the company is facing operational challenges that are impacting its bottom line. We're not seeing the numbers here, but the market's reaction and the cited reasons for the stock drop paint a picture of concern. One of the most critical pieces of information from this filing, though not directly a financial number, is the requirement to maintain a consolidated senior secured net leverage ratio, not to exceed 3.25 to 1.0. What this means in simple terms is that the company's total debt, after accounting for certain assets, needs to be less than 3.25 times its earnings before interest, taxes, depreciation, and amortization, or EBITDA. If ADTRAN's earnings were to significantly decline and its debt remained constant, it could breach this covenant. For example, if their EBITDA dropped by just 15% and their debt was around $300 million, they could move from being comfortably under the 3.25 leverage ratio to being close to or even over it, depending on their exact earnings figures. This could trigger defaults or force them to take drastic measures. Looking at the news cycle surrounding this filing, it is clear that ADTRAN is under pressure. The stock has seen significant drops and reports point to weaker than expected quarterly results and margins. The new credit agreement, while providing necessary capital and potentially lowering borrowing costs, comes with tighter controls. This suggests that the lenders are providing funds but are also putting the company on a shorter leash, demanding strong financial discipline. In my view, ADTRAN is in a transitional phase. They are securing vital funding to continue operations, which is a positive sign that they are not in immediate distress. However, the tightened covenants and the recent poor financial performance highlighted in the news suggest that management faces a challenging road ahead to meet these new obligations and restore investor confidence. The risk I am watching is whether the company can significantly improve its operational performance and profitability to comfortably stay within the new, potentially tighter financial covenants. What I am actually looking for is a clear path to operational improvement that demonstrably increases their earnings and cash flow, thereby strengthening their financial position and making them less susceptible to covenant breaches. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like this video and subscribe for more. Join our Discord in the description too.